coming into episode 3 of my road to 100k in Propfirm payouts. There are a couple of things that I want to showcase and mention. I've gotten a couple questions regarding just overall slow price action or this December price action, and I've got nearly 8 years of experience trading the markets, trading the financial markets. And what I want to convey in this is, it's especially a couple of the newer guys that are trading Forex for the first time, or if this is their first, let's say, December period that they are trading. I want to make sure that you understand that the market doesn't owe you anything. The market isn't there to give you these opportunities. At the end of the day, you will always be the result of your own actions, and you have to deal with the consequences of your own actions. I'm a firm believer that that is the one motto that you need to hold in this space and in this game, because if you don't do so, you will spiral out very heavily and you will do things that you will regret in the future. One of those things is actively trying to chase the market during December, and just like the summer period that we have in June, July, August, kind of that 3-month overlap, it changes ever so slightly every year. Will test your capability to adapt to the market. And this is where people with these very mechanic entry models will tend to lose a lot more, because they will keep implementing the same entry model over and over and over again until they realize too late that, according to their data, that they should have not traded that period of time. It is very easy to say that in hindsight. I want to make sure that you understand that I'm not coming from a period where I'm like, hey, look at your mistakes. This is why you made the mistakes. But what we want to do is try to prevent them in the future and prevent them from happening again in the future. And one of those ways of doing that is by looking at your range, right? And it's kind of the most underrated tool. You will see that during periods of your winning streaks and when you get good trades and all that jazz. Notice, especially for the guys that trade similar strategy as to Exodus, or what I also preach to my students, is that you will have your range, and that can be defined by the dead time before, or that could be defined by the Asia range that is printed that AM before your London session. You will notice that if that is anywhere between your standard, let's say 20, 30, 40 pips, that is a lot better, right? The moment that you realize that you are plotting your P&L tools, right, from TradingView, and you're calculating your SL, and you see that you're on like low single digit stop losses, that should already give you a little bit of a red flag, a little bit of an alarm, like, hey, I'm really trying to target external liquidity and this entire leg of this move, but it is only 15 pips. There's nothing wrong with that, right? But you also need to understand the nature of the market, in the sense that you are trading with CFDs. Most likely you're doing this via CFDs and via a broker, and regardless of what type of account you have, whether it's a STP account or an ECN account, or via Propfirm that does commissions, no commissions, the nature of it is always going to be that there will be some sort of spread or comms, or just, not in your favor. It's a minus game in that sense. And that when you are executing with very, very low SLs, there will be a period of time that the pip count will be lower. And that pip count should give you some sort of slap in the face, that if that is anywhere between 4, 5, 6 pips, where normally you're taking 9, 10, 11, 12, right? There's something going on. And what that something is that the market is obviously a lot more congested, right? The moves are not as vicious, the daily deliveries are not as extensive, and the overall bias slows down. The delivery to the bias slows down. So that is a big tip that I want to give you for the remainder of this December period. We still have maybe 2 good weeks of price action good with, that you can classify it as something that you can really execute upon. And then obviously as we get closer to the real Christmas period and you start crossing out the days on your advent calendar, then you will notice that the market will also behave a little bit differently as expected. That could be in the form of more illiquid movements, more volatility, like sudden volatility due to the lack of volume, or it could be very liquid markets, which is very transactable because all the aggregated volume is contracted to remain over the festive period. So that's just something that I wanted to showcase you guys, explain to you guys to take as a little tip for the remainder of this month, and something that you can also just bring back into your trading next year. Understand that there are going to be moments that your edge just isn't applicable, and that is the way that you should go about it, right? It's not every day that it is your market to trade, and that is the way that you should tackle the Forex market.
So in the third week of trading this P1, I took 2 trades, my 6th and my 7th trade, and I'll be going over exactly what I did, also as to why I reduced my risk with these setups, and give you a general idea of what happened. Overall, this was quite the slow burner. As you can see, I was in this position for quite a long time, and unfortunately took the loss here, which is very much part of the game. But if we just zoom out a little bit, you can see that we had standard protocol. At least I was very content with going for this, because on futures it swept this high, it took this level out, and we noticed that this was some sort of move to the downside. It left behind all the criteria which I normally like, right? We're on M15, we see an imbalance as such. We see a good order block with engulfing candles to the downside. We're above New York Midnight Open. This was a good trade to take. It was a standard trade to take. I split my partials up in these 2 areas as well, as such, with first partial being Asia range low, right? And then the next one being this interim sell side liquidity, because this was all against the daily stage which we had, which just flipped bullish, that you can see here on Monday. So I did mistake myself. I thought I took the trade here on Monday, but it ended up actually being this one. I traded competition and private on Monday, buy side, flipping into this leg right here. But the one that I took on my QT P1 was this. Nothing really too much to add to this. These are losses that are part of the game, standard losses to take on the chin. And the biggest thing that you can do here, in my opinion, is not make it worse than it is, right? There are going to be moments that if you're sticking to this bias, that every shift to the downside you'd want to trade, especially going into New York. I know that some people got their hands burnt here, trying to force that bias to the downside, especially after running this high that we had here, and trying to carry that all the way to the late PM session, which just isn't something that you need to be doing, right? Know yourself from the inside, where if you are feeling the need to revenge trade or to make back the loss that happened in the AM, and you want to make that back in the PM, that's not the best habit to have. That's a very bad tell sign if you want to have longevity in the game, and if you want to make sure that there's some form of discipline in your trading. Because if we go over this, and we're just on M15, right? We're not even looking at M5. M5, obviously, you can see that it would have looked a lot more appealing But the big difference that you can see with, let's say, this setup, and let's say this was your shift right here, the little line that I just drew here, in comparison to this being your shift here, sure, you know, there is a lot more intent here, but the big difference, and that's what you'll see, is often enough this leg, right, that is your displacement, right, the one that needs intent. One, it doesn't have intent in this case, but it trades into an opposing array, right? And I've explained this many times. Why is it more reliable in London? Because you're trading into Asia arrays, if anything, and those hold little weight. But if you're trading a New York session and you're trading a bearish execution, you got to make sure that that bearish execution doesn't fall into a bullish array, right? That's a big mistake I see many people make. It's like they have their E1, very cool, and they put their rose tinted glasses on. They've got the shift, they run liquidity, we sweep this huge previous weekly high level, very cool. So that's from that's from Monday, right? And then you get gobsmacked because you're trading into this M15 imbalance, and you can see how that will play a role in the trade that I took Friday, right? Everything, like at the end of the day, if you're really good and you've done your higher time frame analysis and you can understand whereabouts you need to be on your higher time frame analysis, you can filter everything out on your ETF, right? I know where my high of the week would be printed if I take out, let's say, buy side liquidity, and I know exactly where I should be looking at for my H4, H1 imbalances, if those are getting hit as POIs and we're trading away from them, etc., etc. And I'll showcase, you can already see it. So if this M15 moves all the way to this area, right, and that confirms pretty much this closure and dead time for the shorts that we got here. Hint, hint. So in the next segment, I'll be breaking down that trade. So on my 7th trade of the QT P1, you can see here that we were short based. Again, kind of that bias from that we had on Wednesday, but as I explained, let me break down exactly what confirmed this, and that is exactly the follow through on remaining fractal on your ETF. You're probably scratching your head, you're like, what is this guy saying? What does that mean? Because we had this bullish leg here to the upside, you can see that if I were to draw this M15 imbalance and, you know, carry it on all the way here, what is the logic between this in H1? You can also see that this is an expansion to the upside, breaking significant highs, right? Taking out that Monday high. So we're printing high of the week here, potential high of the week on a Wednesday late PM session. Ask yourself, is that logical to do? Most likely not. So we're printing that on Thursday, if anything. Actually, significantly, you know, what we've done is we've printed low of the week on a Tuesday. But regardless, you need that dynamic risk, which I've been explaining to you guys in the first 2 episodes of this road to 100K in Propfirm payouts as well. That if you have this daily bias and you are anticipating the daily candle to expand sell side, so towards sell side, and you keep, let's say, moving higher on your Monday, Tuesday, Wednesday, and you still anticipate a flip, your odds will increase at least for some sort of pullback or some sort of full flip, if that's, you know, on the cards. Here, you can see how I use this M15 imbalance from my ETFs. So this closure right below, this is very much in dead time, right? So this is where my dead time starts. So I didn't like to put a lot of weight on it, but that also gave me the confirmation that this would be something that I would have wanted to see taken out, right? And that's what we have here. Continues into Thursday, not trading whatsoever. And that allows me to do this. Again, another M15 imbalance, very nice. You know, this prints into H1 as well. If you go to H1, you can see how that was closed, but it showcases you this wick to the downside, follow through that isn't completed just yet. So some sort of pullback would be necessary for that to happen. Either way, this holds the bulk of volume which you want it to be hit, and then obviously on M15 you have the double imbalance right here. So what I mean with that is that you could have drawn it like this, or you could have drawn it like this. Either way, it gives you some sort of pocket, some sort of refinement that you can take into account. From there, price neatly reacted to the downside. This being your M15 shift right here, as such, and I was waiting for some sort of array to have been hit, right? I was waiting for something to have been created in that move because we didn't have clear intent. Like, yes, this was there, but you can see how difficult this would have been. Didn't get hit right. Then obviously we have the sliced imbalance, so the one that just got tapped right here. We have an order block, sure, that you could have used as well. But for me, I wanted to be very, very close to price. So again, what I like to have seen was exactly what presented itself, which was some sort of imbalance in the last little area of pretty much our displacement distance, which was here. And that's where I entered created. So it created on M15, boom, tapped in right there, and then letting price do its thing. Then very quickly, price actually kind of in a very liquid manner consolidated to the downside, respecting arrays, which was great, which was this one, this bearish imbalance right there, hitting that first partial point right here. And then I put my position to break even. And then I got knocked. And then it delivered. And it wouldn't have hit my TP. My TP was that Asia range low from Tuesday going into Wednesday. So I would have been whiffed there regardless. But yeah, management. So the week before I was very aggressive. You can see that I kind of had that aggressive plays, which costed me all the buffer that I had created. And then this week in episode 3, yeah, I was a little bit more conservative, not as aggressive whatsoever. But going into the next week, as I mentioned on my Instagram, I'm going to be adding a new 200K from QT, and I'll be seeing if I can play aggressive on that account, so that we at least have something over the line, at least something tangible, right, by January, which will put the counter up in our road to 100K in Propfirm payouts. So stay tuned for that. In the next episode, I'll be breaking down pretty much what we'll be doing, the game plan. So this is roughly up 1.4%. We're at that 202,400 something. So not a lot, but I'm going to be taking this one step by step, and then from next week onwards, we're going to be playing aggressive with the new 200K. So that'll put us on 400K for challenges that we're just with Quant Techo at the moment. And the goal is to see whether or not we can do something with that. So I hope that you enjoyed this. I'll be wrapping this episode up with one more note on risk management on its own. But these were the trades that I took. I hope that you learned something, and I'll see you guys in the next episode.
So on this note, what I want to wrap up this video with is also the fact that I don't advocate my risk style to beginners in that sense. I ask you all to just take it with a grain of salt when it comes to copying my style. Understand the entry criteria in that sense, understand how I'm entering the market, but I really wouldn't advise my risk profile to beginner traders, especially the ones that are just starting off challenges in December. Not the smartest thing to do if this is your first time, because you will go through a lot of capital by just blowing these accounts, by trying to replicate or emulate what I'm doing. On that note, what I do want to advise you guys to is just see and try to reverse engineer my thought process, because that has really helped me in my journey. Instead of just trying to emulate the greats, not saying that I am one, but trying to emulate the people that I looked up to, I see and I try to see whether or not I resonated with that thought process, and if so, then trying to implement it bit by bit, because I get a couple questions asking me like, hey, did you shoot this 2%? Did you shoot this 1%? Where was your SL? How quickly are you moving your SL to break even? And I can explain these things in the videos and I can explain my reasoning for them, but they will not convey and be similar to, let's say, the style or the approach that you are implementing at the moment. And that is why I want to make sure that there's some sort of difference, discrepancy between the educational side of things that I'm showcasing and everything that comes outside of it, which is my risk profile, my management, my fact that I'm not trading just these challenges, right? These are definitely just something on the side. Aside from that, I obviously trade for fund capital, I trade private capital, I'm doing assessments in futures and whatnot. So there's a lot going on. So make sure that there's some sort of understanding of the bigger picture instead of just full porting these prop challenges and whatnot. So I hope that that gives you a little bit of a confidence boost as well. That if you don't fully understand what I'm doing just yet, that's okay. That's part of your journey. That's also part of my journey. And I'm here to showcase you what is capable with the edge that I teach, with Exodus, with the level of aggression, or, in this case, I was very conservative, and how that can yield you potential results. So that's all part of the journey. That's all part of the things that I want to break the ice with as well, when it comes to trading these challenges, instead of just hitting trades the whole time and being like, yeah, this is the way to go about it. So I hope that makes sense, and I'll see you guys in the next one. Cheers.